Hi, my name is Kyle Clark, and tonight I'm going to discuss the flow of manufacturing cost as it relates to financial statements. There are four stages to the flow of manufacturing costs. The first stage is the material inventory. The second stage is the work in process. The third stage is the finished goods, and the fourth and final stage is the cost of goods sold. The first stage that I want to discuss tonight is the material inventory. The material accounts in a general ledger are basically known as controlling accounts. Each material account is maintained in what is called a subsidiary material ledger, where debits are based on receiving reports and credits are based on material requisitions. The receiving reports are prepared when the materials are received and inspected. The material requisitions record the materials that are used for each individual job. Material requisitions are normally posted in what is called the job cost sheet. In today's world, computerized information is what is used mostly to record the materials, to update the material ledger and job cost sheets automatically. The second stage I want to discuss is the work process stage, where employees usually use clock cards to sign in, but if someone has an individual job, they must use what is called a time ticket. For example, if an employee works 8 hours a day at $10 an hour, then that person will make $80 for that day. And if that person works 200 hours a month at $10 an hour, that person will receive $2,000 for that particular month. Factory overhead costs are all manufacturing costs for the exception of direct material and direct labor. They do include, however, indirect material, indirect labor, factory power, factory depreciation. They use what is called a predetermined factory overhead rate, and that is the total factory overhead cost divided by the total actual base. For example, if the total overall cost is $20,000 and the total activity base is 10,000 hours, it would be you would divide 20,000 by 10,000, come up with $2 per direct labor hour. The third stage I want to talk about is the finished goods stage, and the finished good account is a controlling account known as the finished goods ledger. This usually includes the units that are manufactured, the units that are sold, and the units that are on hand at the time. The fourth and final stage is what is the cost of goods sold. And the cost of goods sold is usually put in the finished goods ledger. And in conclusion, all four of these stages are included in the income statement at the end of each month. Thank you and have a great day.